In this video, guys, we're going to look at the difference between range-bound environments, trending environments, and why we need to trade these a lot differently, not just from a perspective of which type of strategy we're using. Stay tuned. Hey guys, welcome to you. Alright, so range-bound environments, trending environments. Listen, it goes without saying that we're going to use a different strategy depending on the environment we're in. If we're in a trending environment, we're going to be looking to buy pullbacks. We're in a range-bound environment, we're going to trade mean reversion. That's kind of the simple aspect to it. But there's some little bit more dynamic that we have to look at and go into. So when we're in a range-bound environment, let's just look at this Euro USD, for example. And this has been range-bound since I'm kind of filming this from pretty much 1st of August all the way through to the end of September. So 2 months of a range-bound environment. Nothing going on, just sitting, chugging back and forth. Now, does that mean there's no opportunity? No, it doesn't. But what it does mean is you need to change the way you trade things. Now, the first and most obvious way to approach this is to say, right, no longer am I looking for trending type setup. So I'm not going to be buying breakouts. I do not want to be buying breakouts because those are things that are going to get your head handed to you because you're going to be buying a breakout, it's going to pull back to a mean. I want to be trading mean reversion. Now, does that mean that you just trade on the long side? Possibly, if you prefer to do that, align yourself with the broader trend. If you believe that eventually this will break out in the direction of the trend, the longer term trend, which is kind of here and upwards, if you believe that actually will break out here, then you will align yourself long but mean reversion. So what does that mean? So mean reversion basically means, hey, you're not looking for runners. That's the big thing. You know, with a trending environment, you might take a trade and you might run it. You might trail a stop. You might run it on a 10 period moving average trailing, or 5 period if it's really aggressive, or 20 period if you want to give it some room. Whatever your method of trailing is there, that tends to work well in trending environments. You take the trade, you trail it. You might get, you know, a winner that just keeps going and going and going until it stops you out, or you might ratchet your stop up below lows. You play that game, or you scale out. With a range-bound environment, and if you're trading mean reversion, you don't do that. This is the time when you don't run your winners. And I know everyone says run your winners, you know, cut your losers. Yes, to a certain extent, but when you're trading mean reversion, you have a definite level you're looking to come out the trade. The trade idea is that the trade moves from extension back to the mean, extension to the mean. So if you were trading mean reversion on here, you might say, okay, well, I'm going to use this kind of support level here as an area to work around. Every time we get overextended to the top of the range, I'm going to short it. I'm going to come back. I'm not going to look for home runs for a complete reversal over the next 4 months. I'm going to look for, hey, 3-day move, 4-day move, 2-day move, whatever it may be, back to a mean, whatever that mean may be. Now, could be a Bollinger Band, could be the middle of a range. A way to do it is also to put it in the middle of a range like this and say, right, I'm just trading literally back and forth, back and forth, back and forth. Still got to stop, but the important thing is, number one, is that we're not trading breakouts, we're trading outside in type trades. And two, which is the one that's often overlooked, guys, is we're not looking to run those winners. And yes, that kind of contradicts a lot of things that we say as traders, but the point is we're looking to go back to a mean, whatever that mean may be. Maybe it's a mean around a moving average. However you define a mean, that's up to you, but that's the target. Now, could you have a small portion as a runner to go to the other end of the range, you know, to extend the other side of the mean? Yes, of course you could. You know, let's say you kind of had been buying at the bottom of this range and you're coming out most of it in the middle of the range and you're holding some just for an expectation of a further push higher. I don't mind that personally, but I think it should be a very small amount. Unlike a trending environment, let's have a look at something that's been trending, like a stock that I know I've been heavily involved in. This is not mean reversion, so you're not fading the move. You're aligning yourself only with the trend. You're either long or you're out. That's it. You're not trying to be clever here. Now, I know some people kind of try to find these short opportunities, but honestly, guys, you're making life hard for yourself. You know, and yes, there will be a time when every trend will change and there might be a short opportunity later, but there's no need to make life hard and challenging. Just align yourself long or stay out. So when we're aligning ourselves long, we're waiting for pullbacks, 2 or 3 day pullbacks to support, little wicks, stuff like that. You know, we've talked about how we get into these trades specifically in previous videos, but just keeping it broad for now, the name of the game is we're aligning ourselves with the trend. We're either going with the trend or we're staying out. But the other thing is, this is when we can run those winners. This is when we can go back to the textbook and say, cut the losers, run the winners. Now, we cut the losers regardless of the strategy we're in, but the difference from mean reversion to trend and range expansion is range expansion, we don't know how far this is going to go. And if you're trading a range expansion type trade, the gap, the flag, the buy, if you're trailing this, if you're trading a 5-period moving average, it can go, you don't know where it's going to go. What have I got here? I think I've probably got a 10-period here, so let's go back 20. Go to a 5 for example. Just an example, guys. First close below. You've got many days of run there. Now, listen, we've got hindsight here. Appreciate this, but the point is, because you're trading that range expansion, because you're trading the trend, you don't know where it's going to end. So running the winners is the right thing to do. Now, you may scale out into like pulses of strength. That's the kind of thing I like to do. If we get 3 days of strength, I'm definitely taking some off, because I know that even if the market continues, generally speaking, we're going to stretch and we're going to kind of contract and stretch. But if you want to run the whole thing, this is when you can. This is when you can have those real kind of jackpot type trades that you won't ever get with mean reversion, because the thesis of mean reversion is that it's coming back to a central point that you believe is the mean value. Trend is like, hey, I don't know where it's going to go. This could rip up, this could explode, and hey, who'd have thought this stock, this specific example, would be 4 times higher in price in middle of July, coming into the end of September compared to where it was at the end of June or the early part of July. Nobody thought that. And so, yes, whilst we've got to be careful not cherry picking stuff, the point of this example, guys, is to say, hey, when we're trying to say to ourselves, I need to run trades, I need to run trades, I need to run trades, it's only doing that when you're aligned with the right conditions. Don't beat yourself up for not running trades, and in fact, don't even attempt to run trades, in my opinion, when you're trading mean reversion, because it's a different type of strategy. Trend, that's when you go, right, I need to stretch myself, I need to try and get these winners to run longer, I need to try to ratchet up the stop, I need to sit through a little bit of heat because the longer term trend is still intact, playing that game. So just thought I'd mention, guys, there's an important distinction to make: mean reversion, trending, and understanding what your targets are and what your objective is. And we all talk about running trades, running winners, but if we're not in the right environment and we're not taking the right trade, then that goes off the table. It's just a case of finding the high probability setups, getting those singles, getting those doubles, banking them, and then waiting for a range expansion type environment. Or you're filtering through different markets and finding markets that are range expanding, that are trending. Anyway, guys, if you like this kind of stuff, thumbs up, appreciate it. Don't forget to check out all the links in the description below, channel sponsor.